So, hi, dear all. Thank you very much for joining us this morning. I heard during dinner yesterday and all of these other days that you had very interesting discussions. And I really hope that this morning we're going to keep that high energy with all of you as well, and with my dear esteemed panelists here. But before that, I wanted to just let you know that today we're starting the let's say, day on banking. So sustainable banking and transition and understanding how banks can actually help to deliver on sustainable finance. My name is Daniel Bouzas. I'm the Regional Coordinator for Europe at UNEP-FI, so the United Nations Environment Programme Finance Initiative. And I wanted to say a brief overview and provide you some words on what we do and how do we see, let's say, from a global perspective, a European perspective, and a bit of a CEE perspective as well, the evolution that we see on sustainable finance. So UNEP-FI, you may have heard, I mean, if you're working on sustainable finance, you may have heard this acronym. That is the United Nations Environment Programme Finance Initiative. So we are a collaborative effort between the global financial industry and the UN. So we work with financial institutions that are our members, and we do, we collaborate with them, generating principles, alliances that they can join in order to integrate sustainability more directly into their actions. So what we also do is to generate collaborative tools that banks can use in order to manage that transition and to manage their sustainability journey. For example, we are convening the Net Zero Banking Alliance, which is, from the race to zero. That is a UN campaign that certifies institutional approaches on sustainability that works together in order to make sure that banks achieve a 2050 goal of 1.5 degrees in their portfolios. So before this, just wanted to say that when we are discussing about sustainable finance, sustainability in Europe, we need to really look into banks. Normally, it's said that finance is the blood of the economy, it's the blood of the economic system that allows all of the functions to properly work in the system. But if we talk about this in Europe, we're mainly talking about banking. Like banking is around 70–80% of the financing that is provided in Europe. And at the same time, many of the companies that are active in Europe are SMEs that mainly get their money from banks. So we're looking into a very concrete, specific approach to sustainable finance, to sustainability that we have in Europe. And taking that into account at UNEP-FI from the European perspective, let's say the work that I lead, we are trying to understand how we can focus from a very different, let's say, scenarios in Europe where you have EU countries that have very advanced sustainability approaches, European banks that have very advanced approaches as well, like, for example, ING, that is joining us in the panel. But at the same time, there's a difference between the regulation that is already, let's say, evolving, that is one of the most advanced in the world, and how, for example, the CEE region will approach this. There are some differences within Europe, even though everybody participates from similar elements. So from our side, I just wanted to give you a brief overview as well on how do we work with banks at UNEP-FI. I introduced it briefly, that we work, for example, by generating principles, like the principle for responsible banking, where we have 6 principles that banks that want to integrate into their portfolios an approach to achieve the Sustainable Development Goals and the Paris Climate Agreement can join. And they do so by aligning their portfolios, measuring their impacts, and setting targets. So this is a very specific approach to sustainable finance. Normally, we talk between alignment and risk. Banks can take a look at climate risks, transition risks, and try to understand how the portfolios are going to be impacted. At the same time, they can align their financing to make sure they're meeting some specific targets. And that's the core of what we do at the Principle for Responsible Banking. If those banks want to focus on climate, which is one of the key aspects on sustainability, especially in Europe, we have the Net Zero Banking Alliance that I introduced briefly, that allows banks to set targets for achieving a 1.5 degree scenario in their portfolios by 2050. So what do we mean by targets, and what do we mean by alignment? Well, it means that banks can think about, okay, where is my portfolio standing now, and where should it go in order to meet those targets? So what we have developed is guidelines for climate target setting that allows institutions to set targets to that goal. So in that regard, we are looking into covering everything in the balance sheet of the banks, from lending to investment, covering 9 highly polluting sectors, as well as any other elements in the portfolio that are having high level of GHG emissions. And all of these scenarios need to be in a, let's say, low or no overshoot, so that the transition is smooth, curve down, not with a spike at the end. So we're looking into this, into setting targets with very clear approaches to have targets that are long-term 2050, mid-term 2030, based on science and with clear disclosures, so to allow the market for specific also knowledge on how the banks are performing. And I can understand also from the investor's perspective, that's also quite important to understand how the banks are behaving. We also have some rules on how compliance should happen, so we do not have any outliers that do not, let's say, comply fully. And we understand that, of course, there's many approaches, many portfolios, many banks that have different understandings of sustainability, but we're trying to align as well with concepts that can be easily understood. So that is from the global level. That is the approach that we have with banks on how they should think about moving towards increased sustainability, finance the transition, which is one of the core elements that we need to tackle today. And that's from the global perspective. That's how we approach it. So any bank from any country in the world can sign to these principles or to the Net Zero Banking Alliance and work towards that. But of course, we are in a very specific context. We're in Europe, and now we are in the CEE summit. So how does this play here? And I understand that we have people here in the panel that have very different approaches, coming from very different places. And Europe has different components, but the majority of the CEE region is within the EU. And I wanted to indicate that the EU has the most advanced sustainability, sustainable finance regulatory framework in the world. So how does it mix with what we see or what we have discussed as well in the past days regarding the region? Well, the context, it's quite clear. We have an ambition at EU level that has been ratified by all of the EU member states, that it is to achieve net zero by 2050, with a 55% reduction in greenhouse gases by 2030. Of course, that is the overall goal, but different countries will achieve that goal, or they have looked into their contribution to either before or after, but in the end, they all have, let's say, this element there. And how is this planned to happen? Well, it is public finance and private finance, as well as blended finance. So we see that the EU budget tries to also include some specific elements on how to finance sustainability. Blended finance will also help, let's say, to work with private and public financial institutions, but then the regulation comes into private finance, into curbing the behavior of specific institutions, if not all of the institutions that are relevant in this context, to actually work towards ensuring that the goals are complied with. And you probably have heard, and I think I'm famous at UNEP5 because I cannot be more than 30 seconds speaking without mentioning EU taxonomy. It's probably one of the key regulatory elements that has shaped how the EU looks into sustainable finance, which is going to influence how the CEE region as well looks into sustainable finance. It's going to be one of the key drivers. But many times we hear about that word, taxonomy. Okay, that's a buzzword, everybody's looking into it. We have also ASEAN taxonomy, Latin America is looking at taxonomies, but what is it actually that? No, so I like to go back to the original name of the regulation, that is the framework to facilitate sustainable investments. So that already frames the concrete specific elements that are part of the regulation, that is not only a classification system of what activities can be considered as environmentally sustainable, that is the core element of the taxonomy that defines how activities in Europe should perform in order to be aligned with the 2050 goal of net zero. So that is, let's say, already the goal that wants to be achieved. How this happens? Well, it's already incentivizing transition in many different ways because it gives that goal. So when you assess the current level of performance, the baseline, you also understand what is the distance that you have to transition. So the taxonomy generates a level of disclosures that has been unprecedented in terms of ESG disclosures that all of the large companies in the EU, including banks, investors, need to comply with. And that showcases that the economy is interconnected. And even if finance is the blood of the economic system, you still need of what has been called the real economy to provide key information for the financial sector to be able to understand what's happening. So it is a collaborative effort that everybody needs to come together. And I think this has been a critical aspect of how transition is thought in Europe. We do have the core elements of understanding how corporate transition works, how sectoral pathways work that on the Net Zero Banking Alliance we use. But when you go at the level of detail that in the EU is looked, is at the activity level, understanding how activities should perform. So it's no longer as well about only greenhouse gases, but it's also about understanding the core concepts. Then, of course, I'm not going to stop, but just to say that this framework is expanded. We're looking into seeing how the taxonomy is going to expand, to see how, let's say, this regulation is going to change. And also, it's one of the key topics that we're going to discuss today, how regulators can look into what is happening and how to apply it. And we see that now we also have disclosures for investment funds, to understand how retail customers need to be asked for their preferences before they invest. Also, we have a new, let's say, disclosure regime that is complementing already what the taxonomy has started, that is called the CSRD, Corporate Sustainability Reporting Directive, that it has a huge amount of standards that have been recently developed on how to tackle transition from all of the aspects, not only environmental or climate, but also social and governance. We also have the, let's say, the central banks, the financial regulators, looking into Pillar 1, Pillar 2, Pillar 3 measures in order to curb as well the behavior of the financial institutions, which would be the opposite side of what we've been talking about now, that is alignment. So you look at alignment, but you can look at the counterparty, that is risk. But yeah, we also have products, green bonds. We're going to talk about products today, how we can see specific say, products helping to that transition in a more concrete way than others, as well as the evolution that is happening all around. So I'm reaching the end of my points, and just to say that this has been a brief introduction on how global and European elements play together. And why is this relevant? Well, because the CEE region is inserted in the European reality and, of course, in the global reality. And we do have financial institutions that are global, and they are paying attention to many different jurisdictions. And in this case, it's key to understand this. And at UNEP5, we have identified, actually, the engagement not only in the CEE region, but in all of Eastern Europe, Central Asia, as one of the key aspects that we need to undertake in order to make sure that sustainable finance is expanded and makes sense in the rest of the world. And we also work with supporting institutions and with institutions that are helping us, key stakeholders, to work together, like ISFC, to which I thank very much the invitation. And that would be it. But I've been talking already for like 13, 14 minutes, and I do not have all of the answers. That's why we have a great panel here today that is going to help to understand how everything works together and how we're going to be looking into all of these elements in the future. So I'm very pleased to introduce everybody. So I will start from the closest to me. So I have Eric Berghoff, that is the Chief Economist of the Asian Infrastructure Investment Bank, based in China. Then we have Christina Snagi. Yes, that is the partner on risk at Deloitte, based in Budapest. Then we have Eva Bukova. I hope or Buchova.
Buchova, but Bukova is also good.
Okay, perfect, perfect. That is the Senior Advisor, Chair of Sustainability Committee at ING Bank. It's based here in Prague, so thank you very much. We also have Heather Buchanan, that is the co-founder of the Bankers for Net Zero. That is the UK chapter of the Net Zero Banking Alliance that I've been selling to you, hopefully efficiently. And we also have Sasha Beslik, that is the Chief Investment Officer at NextGen ESG. It's a firm based in Japan, and he's working between Japan and Sweden. He says that he's traveling in time sometimes. So thank you very much, everyone, for joining me, and I think that we can start. So from my side, I just wanted to ask an overall question, that is to, what do you think are the core challenges? I introduced some for what you think are the key challenges that the world and the CEE region specifically are facing in terms of transition finance and sustainability. So who would like to go first?
So I think you spoke about the distance to net zero. And I think despite all the regulatory frameworks that you mentioned, which are necessary, this distance is unclear. And what is missing here is data and measurement. I think we're going to be spending a lot of the next hour talking about data and measurement, but that is crucial in order for business decisions to be made. I think there's business opportunities in sustainable finance. The banks see it, but in order to make this topic or bring this topic from a bit of a fluffy, desirable, and modern idea into, hard and fast business, we have to have that data available.
Okay.
I totally agree. The major challenge we are dealing with is imperfection. So we are striving for progress every day. At the same time, we also see different starting position, particularly on the side of whether it's private or public sector, different starting position of each of the CEE country. That's one thing. Plus high reliance, obviously, on emission, on highly emitting industries. So that's the second, and obviously in light of the war, we are facing huge energy independence strive, which is obviously helping the sustainability efforts, but it is the #1 focus right now. And when speaking about the mismatch between our different starting positions, you certainly notice that we have corporates who are purely regional or being out of that particular country. There are corporates who are international, where the pressure on sustainability has been strong already since a while. So we have different dynamics within the sectors. And what we are definitely missing is sector-based targets in terms of the decarbonization. Whereas there are overall policies, energy policies or decarbonization policies, but at various levels in different countries, there is nothing like sector-based approach. And here, again, back to data, open source data is scarce. That's why I very much like initiatives like Fakta o klimatu here in the Czech Republic. We see it on one of the transparents, where we definitely now have access to some level of data, obviously not tailor-made yet. But indeed, all comes back to imperfect data.
Okay. Indeed, I think that this is one of the key elements that sustainable finance has been defined many times as a very good example of imperfect information in the market, that you do not have all of the information there. But I think, Sasha, you wanted to come in.
No, I think this is very relevant. I mean, the data, yes, and data has been coming in for a very long time. But I think you mentioned something that was very interesting. You said that financial industry is a blood in the economic system. That financial industry needs a blood transfusion. And it needs a big blood transfusion, because it's not only about the data. Data is part of that. It's also the fact that there are no targets. And if you don't have a target, you don't have results. Yeah. And I think it's a bit unfair for Central Eastern European countries having, a much longer transition sort of a path, given that they have a much bigger segment of medium and small companies. They also have bigger dependency on other types of sort of energy resources that you will have in Northern Europe and somewhere else. So it's a sort of a longer step they need to take, although the regulation in European Union right now is also affecting the Central Eastern European countries, because they have pensions, they have investments. They need to be adjusted to this. So how can we make that happen a bit faster? So going back to the transfusion, I think that the entire sort of a sustainable investment industry has come to almost like a return path. And now we need to sort of ask ourselves, what do we want with this? Data is one part, yes, but we had problems with data before when we were not doing sustainable investments, where we were doing just mainstream investments. You always have a lack of it. I mean, transparency level needs to increase and so on. And then there is another thing in Central Eastern European countries that is creating a bit of a stall on deploying a larger type of investments, and that's related to transparency. You know, in some countries, rule of law is not where it should be. It's there are risks not here, but in many other places on corruption and so on. So there are issues that need to be addressed. But I think we need to focus more on targets. Are these targets realistic? You know, they are realistic for these countries, given where they are. And then we need to start talking about, you know, calling a shovel a shovel. We can have all different kinds of frameworks, but, you know, we need to start looking at how we can help these countries to transform much faster.
Yeah. And I think I work for an organization now that is majority controlled by emerging and developing countries, and so my greatest worry is that exactly for the reasons you're explaining, these countries will be left behind. I think everyone agrees they need a longer transition period, but I think what we really risk is that these countries will be left permanently behind, because, you know, rich countries are not going to accept that, you know, some of these countries are producing in a less environmentally or less climate or with more carbon footprint and so on. So to me, that is the greatest concern. In this region, I previously used to work at the EBRD, and I had the tremendous benefit of seeing how this region managed to transform itself, also actually in the energy space. I don't think there's any region that so quickly went through and made such massive improvements in energy efficiency as this region. But now, I think because of exactly what you're talking about, this region is again facing the possibility of being left behind, because it's about many things. It's about data, it's about targets, it's about awareness. Even you know, I just looked last night at some sort of awareness survey, and it is clear that the awareness of the issues in the banking sector in this part of the world is much lower than, for example, in Western Europe. So it's a combination of factors, and you know, this will only work if everyone is on the bandwagon, everyone is on board. Yeah. Otherwise, we will not succeed.
No. I see. So we've heard about data and targets as some of the key issues. And Heather, maybe I wanted to turn to you, given that you're working with banks in the UK that have committed to net zero. So how is that being as well, let's say, a focus there?
So I think, so first and foremost, the commitments that were made under the Net Zero Banking Alliance last year, I don't think any of us appreciated just how much of a difference they actually were going to make. And that's particularly in their financed emissions and Scope 3 emissions, and the fact that the granularity of information that banks now require in order to meet their commitments has been a game changer. Yeah. You literally have banks, we've got 6 million SMEs in the UK. The one, everybody always says SMEs don't have anything in common with each other. The one thing they do have in common with each other is they have a bank account. And banks are going to be requiring information from them, and yet there's no agreed standard of proportionality on what that information is or how that's going to come. And so by virtue, and so the banks have a problem with that, and that they have to fix. And by virtue of the fact that the banks have a problem, the SMEs now have a problem. So that's one of the kind of key things we're working on, is how do we actually, at a very granular level, start to work out and identify where there's potentially blockers, you know, maybe the regulatory blockers that we need to unlock, and where there are kind of opportunities. And the clear thing that I've certainly seen just in the last year since those commitments have come in is just the level of kind of influence and interest in the sectoral transitions and pathways that all of a sudden banks are taking, because they're getting to grips with the fact that they actually have to deal on the ground with every single customer, and whether it's a mortgage holder, because obviously certainly, you know, our housing stock is not the most energy efficient, shall we say, and we've got a massive issue in terms of how do we change behavior at such a large scale, and it's something the banks can't do by themselves either. So there's probably a lot more collaboration between banks and government and civil society, trying to kind of roll up the sleeves and figure out exactly how we do this. As ultimately fundamentally we're redefining risk, and we're redefining value within this thing, which is not a small thing. for the financial services industry or for anybody. And so how do we kind of get all the market forces aligned is probably one of our biggest challenges.
Mm-hmm. Thank you. I think we have touched already very interesting topics, and Tome should look at the camera to make a message to say, people at home, if you have any questions, please join Slido. I think you can see here the tag that you need to include in the website. So if you have any questions and you're as hooked as the audience here in person, please do it through that link. So I wanted now to turn into the region, into CEE, understanding one of the key elements that I think is underpinning all of this is also the issue of proportionality. That how do you manage to get this information? Sasha was saying that it was already difficult to get even financial information before, so now sustainability information is an extra hurdle. Then the issue, of course, of understanding the difference between risk and value. How is this being redefined? As well as the core elements that we covered before, the problem of being left behind, etc. So how would you see this? And I would like to turn first to Eva to understand, from your banking perspective, how would you approach that? What is the key proportionality elements that you would need to have in mind when working in the region?
Mm-hmm. Probably I would mention two aspects. First, one is the impact, measuring the impact, understanding the impact, and not just the impact of ourselves as the institution, but also of our entire portfolios, right? Because that's what the net zero is about. And the second is the climate risk, implementation, understanding, reflection in all the processes, and probably also in the price of funding. So these are two completely different challenges we are dealing with, and when speaking about impact, that is definitely about the way how we are able to effectively collect the information we have available. What we did here in the Czech Republic, we decided to, under Czech Bank Association, to create a working group for all banks. And actually 16 banks signed up to a sustainability memorandum, where they are committing themselves to sustainability practices irrespective of which direction the government goes. So that's one thing. And second, they have put together an ESG questionnaire. It's kind of a guide for all the companies, small, middle, as well as large companies, to know what type of information will be effectively requested going forward, be it under taxonomy, be it under EBA pillar, be it whatever comes in the next coming 3 to 5 years. It's a dynamic document, obviously, but that one effectively is a combination and a collection of most of the requirements the 16 banks have on the clients. So the purpose was to somehow make it easier for corporates to figure out what's ahead of them, how to focus their transformation, and how to focus the information collection within the companies. And it helps considerably because other than also basic information, are you already reporting on your sustainability, there are very specific information on that particular industry, on the carbon footprint, on the scope 1, 2, 3 progress, on the way how companies approach reduction of emissions, how do they approach circular economy, how do they look at the certification of their green buildings, and so on and so on. So it's very detailed. It has more than 50 questions. At the same time, this shall help to unify a little bit, at least the basics. So that's one thing, and effectively the way how we want to go forward is to make it publicly available, or at least for certain types of industries across the country, so that the client fills it in only once and it's available for everybody whom he wants it to be available. That's one thing, and obviously project by project there will be specific information required, but that is already then up to bilateral discussions. So this is one of the ways how to show that also financial industry can collaborate and has to collaborate when it comes to sustainability. This way it will help effectively to collect the data, and not just that, part of the questionnaire is also understanding the risks, and particularly impact of these risks on these corporates. And we are aware that time needs to pass, right, in order to collect all that information. Not that many corporates could really fill in the questionnaire right now fully, but it's a step-by-step approach. And the second thing we are dealing with, obviously, are the resources of small and middle enterprises. Although EU taxonomy will hit them a little bit later, at the same time, when the large corporates will start calculating scope 1, scope 2, scope 3, it will engage supply chains, right? So it will hit SMEs and mid-caps much earlier. And now probably my big appeal, because this is what we are dealing with really on a daily basis, not necessarily as ING Czech Republic, because that's not our target segment, but as banking in general, that SMEs and mid-caps have very limited resources available, financial as well as human. Third, very little access to the expertise and data. And fourth, obviously, their businesses are much more vulnerable to this particular situation. So their business might evaporate very soon if they don't align with sustainable practices. So other than, for example, under Změna k lepšímu, we have invented an ESG academy, particularly for supply chains of big companies. So for small and middle enterprises, in order to get education on ES as well as G part. However, what we are dealing with, indeed, is we need to get access to resources for these companies. As you mentioned here correctly, small and middle enterprises create 75% of this economy. So from that perspective, we need to be very careful how this is being dealt with. Also in terms of auditing practices. So that's the impact as such. And when it comes to risk and climate risk, obviously there needs to be a huge help also from the side of regulator, because on one hand you can create your heat maps, you can get out of the scientific data, but we are indeed not scientists, and you mentioned it very well. So what is definitely missing is open source methodologies, right? What ING is doing globally, and you already mentioned it, so-called Terra approach. What we have done is effectively, particularly make a publicly available open source data under Pacto tool and DII, which effectively helps for all the financial sector industry to effectively put in the data and try to get a feel how far we are from Paris Agreement. We were one of the first 4 or 5 banks who effectively tested the system, and we are progressing based on that. And you already mentioned that so far it includes data only on 8 to 9 core emitting industries. But this is one of the ways how you can get information. Where are you standing with your portfolio? What do you need to do to align it with 2050? And actually what technology development needs to happen? And this is also a very good base to create also industry-specific information and help with this specific information with our clients in terms of advisory. So we have a big role to play, not just to finance the transition, and we come to that later on, I understand, but also to advise our clients on their transition path.
Exactly. No, and I think that you have touched upon key issues, because let's say that banks are not only risk managers, but they also are relationship managers with the clients. And this is one of the key aspects. I mean, we were discussing as well over the breakfast, I believe, that if you ask many questions, it may become complicated, but at the same time, you're also educating the client, and you were indicating about this ESG Academy, etc. So it's a complementary approach, and in many cases, it defines as well what is the license to operate of the banking sector. No? To understand what is the role that it needs to play, and it may be this, in terms of helping the transition, understanding the risks, and integrating it all together. So with this in mind, given also the specific makeup of banks in the region, I wanted to turn to Christina to understand, you work with banks, you work with risk.
Yeah.
So to understand a bit, how are you seeing it? How are you seeing, let's say, the evolution in the region? How you see the approaches that are coming? We have heard from ING, but you probably work with other banks. And in many cases, we see in the region that there's a lot of subsidiaries from other institutions. So how is the interplay?
Indeed.
Yes.
I think it's a very heterogeneous landscape in the region. And the way I like to split this question is strategy, integration, and products. Now, if you look at strategy, I think there's 2 important questions here. One is exactly what you said, banks want to start gathering the data to figure out how far they are and then set targets. So we have a catch-22 here in a way that I believe only can be unlocked by practicing and, proxy reports and just getting a feel for the green asset ratio of the portfolio, the Scope 3 emissions of the portfolio, and so on. So what I see there in the region is that there's the subsidiaries of the international banking groups who in their head office are outstanding in managing ESG. Sometimes they have some targets on a group level, but it's not always clear what the subsidiary level targets are. These banking groups often have an advantage because of the institutional knowledge they have in the head office, and sometimes they have a disadvantage because they are a very big organization, and it's very difficult to filter down extremely practical things, and extremely practical things are needed here to move forward. And the challenge is, if we come back to data, for example, are often quite local. The data is sitting in national ministry databases, it's linked to national initiatives. So, very often global data providers can only unlock the problem to a certain extent. So on the strategy front, this is what I see with the international subsidiaries. And with the local banking groups, Central European, Eastern European banking groups or banks, they are actually surprisingly nimble. I think some of them are making very good progress on this topic. They are taking the initiative. Yes, they have less institutional knowledge, but they are being pragmatic and are not far behind from their international peers. So that's strategy. If you look at integration, if you look at banks' risk appetite, for example, very often we're still on first generation type risk appetite statements when it comes to climate and environmental risk. There are qualitative statements, there are exclusions, but measurement needs to evolve so that you have more quantitative metrics. And I believe stress testing will be key to have truly calibrated quantitative metrics. So a bank can say, I don't want to have more exposures than X, so that under a stress scenario, my losses don't exceed Y. And that type of a capability, again, it very often exists in the head office level, and we've got the ECB stress test happening, which I think is great, and I think will push the industry to move on this. But if you look at Central and Eastern Europe, stress testing capabilities are in a pilot stage, typically. And then when it comes to the EU taxonomy implementation, a lot of the participants are looking at this. But I think it says a lot that typically focuses renewable energy and real estate, which, if I can say, are the easiest, and they are still not very easy at all. And if you look at some of the other activities, or if you look at SMEs, that remains a challenging topic, and I think we'll come back to proportionality. And that takes me to my last point, which is products. And I think products are very interesting in this part of the world. Most of my clients are very interested and motivated about the business opportunities in ESG. So you have a cost of compliance anyway, for sure. The EBA is pushing this, the ECB is pushing this, local regulators are pushing it. But what they find compelling is, how can I make more of this? And my experience is that in those geographies where we had some subsidized products, for example, in Hungary, we had a big program on green mortgages. Suddenly, the amount of data collected jumps because the banks are motivated, the customers are motivated, so you can leapfrog a bit your way through if you focus on business. But then there are some other segments, and you mentioned green bonds or sustainable bonds. I think very interesting instruments. We also spent a long time at Deloitte Understanding together with the EBRD, actually, how can you create a framework in Hungary? And it's still tricky. If there's subsidized programs, they move very easily, but capital markets are not that developed in most of our countries. So you don't have such a good basis as if you were to raise the same question in Luxembourg, for example.
I see. And I think you touch upon three of the key topics, as you said, strategy, integration, and products. And we're going to go through these elements. So for me, I wanted to briefly ask a very short follow-up question to Eva in terms of how do you see this in ING in terms of strategy and integration, and especially the first part of the intervention also from Christina regarding the head office and the specific work here in the CEE region. We're going to tackle the products later, so yeah, those first two. If you could, yeah.
ING has a very clear strategy how to actually push forward, and particularly signed up also to the Net Zero initiative. So from that perspective, the pathway is clear, and ING is the first bank who has implemented Terra approach, meaning really focusing on aligning the portfolio with the Paris Agreement, and indeed a step-by-step approach for each of the subsectors, which is very relevant and important. And we are also regularly, very transparently reporting on progress on an annual basis on each of the subsectors, the progress we are making. So we are taking measures, and these measures, indeed, you mentioned it, can be sometimes exclusive, that sometimes we need to take harsh decisions, being we stop new coal opportunities, we reduce oil, and very similar types of decisions. At the same time, we also don't mean to be disruptive or just non-inclusive. We are trying actually also in these difficult sectors to help the transformation with the clients, which is not an easy way, but it is definitely happening. And I think we have taken it also here into CEE region, and we can proudly say that we have contributed big time to energy transition here in the Czech Republic and also in the region, via actually really encouraging all our core clients who are defining the energy strategy here in this region to really take it seriously, to start planning and to start, for example, switching off some sources which are really not considered the most environmentally friendly, and indeed create a very clear transition pathway, and on top of the hill effectively issue even a green instrument. So we have followed this with a couple of clients of ours in the past years. We know what does it take for them. It really requires a lot of time, a lot of thinking, a lot of strategy making. At the same time, it is possible. It's not easy. It is possible, particularly in light of the current situation. Certain things might be postponed, certain things might be done differently. At the same time, we take it as a temporary situation, which will lead to ultimate target. So we see it is possible if you focus on it. So we really try to implement global strategy here, also in the region, try to take it really in specific, because as Eric already mentioned, the transition time here is required much longer than we expected, and we needed to take it into account. So not such harsh decisions, but really going step by step with the clients to transform. But it is possible. Indeed, we need to take into account the pain, at the same time also the gain which comes from it, and also to recognize that not all these companies will be winners of that particular situation. And that is probably the most challenging to accept. But indeed, this market is not so developed in terms of green instruments. However, we have been the first bank speaking really to the clients in the region, trying to figure out, okay, what is the need, what is the real gap, what is it we can really effectively help with instruments. And indeed, this region is dependent on subsidies. And once the subsidies are there, everything goes smooth. In case the subsidies are not there, it is more difficult. So next to the traditional instruments, you are certainly aware, ING was a bank who effectively also put a little bit of innovation into green instruments as well, and this is how KPI-linked or sustainability-linked types of loans were developed as a transitional instrument. And this is where we see the biggest demand now, because these transitional instruments effectively help companies to step-by-step improve and commit to the public as well in a relatively structured direction. Yeah. So this is one of the ways how you can take it forward in a region which needs more transition.
And we're going to indeed take a look into that in a moment, but I also wanted to turn a bit to one topic that I think has been underlying, and it's very interesting, that is that many actors are involved in this whole process. Yep. It is not only banks and the customers, it's the regulators, it is the data providers, it's everybody. And I wanted to turn to Heather, because your institution, it's a very interesting collaboration as well, because working with the banks, but also thinking about how to integrate it also with the governmental approaches, how things are working together. And I wanted to know if you could give some lessons learned from the UK that may be useful, or to let us know a bit how these things have been working, in case they can be helpful for
No, certainly. I mean, we found it to be a really positive kind of experience, and to a certain extent, I'd like to say that a lot of what we do is we're trying to de-risk things for the politicians as well. If they're saying, to make some fairly bold policy decisions that might not necessarily even be popular at a time, even though we all know that we're kind of going this direction, it becomes a very powerful message when you can align, and within our organization, we're not just banks, we've got NGOs, and we've got WWF, we've got E3Gs, we've most of the government departments sit as, and the regulators sit as observers within it. And so to kind of de-risk the big policy decisions, it's very powerful if you can say, well, you've actually got the finance industry, and you've got businesses and business groups and NGOs kind of saying the same, singing from the same hymn sheet, going, well, if you make these decisions, we'll support you, and also we'll be there to help pick up the market, as it were. And a lot of the times it is maybe in the first instance, they need to have some guarantees behind the products. There's some things to get that to the kind of tipping point, in certainly within the retrofit agenda. That's a big point for us, is everything's too expensive. It's very much a boutique thing, whereas we need to make it a bit more IKEA, where everybody feels that they can engage in that. And in order to do that, we need to get the price curve down. So just that active collaboration and discussion, ultimately, the key is that we create a glide path and not cliff edges and the way, because for the most part, with the tipping point's already been reached in terms of the commitments and the public commitment and then government's commitment to where we need to get to. Where you get resistance is concern that it's going to be those that can least afford it who have to pick up the pieces if we don't do the policy right. And that's where a lot of our discussions now lie, is making sure that we don't really have those unintended consequences, particularly now when nobody can afford it.
No, thank you very much. I really like that, the glide versus the cliff edges. I think it's a very good way, because also matches with what we say also with the transition pathways, that there should not be no overshoots, nothing around. So it all comes together into that. And I think I wanted to turn to you, Eric, because in terms of the role of the public financiers, working together for this de-risking, maybe not for the politicians, but for the private sector, is a key element of your work. So how would you see this working well in the region?
I very much recognize that what you describe is the reality that we're looking for, or looking at, and we are trying to see where are the sort of weaknesses in the system, and where can we be helpful, maybe convening people, trying to find sources of subsidies that can be used to move things forward. And I can just give some examples of things that we are working on right now. So one big issue in this region, it already came up in some of the comments on supply chains, and these global value chains have expanded very quickly. Particularly emerging and developing countries have become much more present. As you see, a major shift in that regard. One thing that we could be doing and could do and are doing is to try to work on the one hand with these lead firms of these global value chains to identify decarbonization opportunities and along the whole value chain. But then we can also work on the other side and look at countries that want to attract these kind of investments. Can we help them offer decarbonization opportunities? Can we help them offer renewable energy? Can we help them offer multimodal green transportation and so on? So we can play that role. We are working a very interesting, I think, pioneering type of investment in the Singapore structure, where we help bring in institutional investors into infrastructure and particularly green infrastructure. And the way we do it is that we lift off these assets from banks, after 4 or 5 years when the construction risk is past, so they can go in and invest. The banks can go in and invest in new infrastructure. We can take this off and we can put it in and securitize it and sell off to institutional investors. So these are the kind of things that we look at these. Where are the weaknesses in the system? Where can we be helpful? Maybe later on I'll just say something about an initiative that I have in mind for this region that can possibly help address some of these issues.
Okay. Very interesting teaser from your side, and I want to start easing into the product discussion, but before that, and also looking at the questions we're receiving, I wanted to turn to Sasha. We're hearing a lot about data here. Like, what is lack of data? Is it really, let's say, a big thing, or is something to delay the changes? Or is it as well, what are the initiatives that are happening to improve that data? So I wanted to turn, let's say, from the investment perspective as well. How are you seeing the evolution of data, and how would you see, let's say, the core elements that need to be tackled in order to ensure that sustainability transition and proper products can be developed with the data? Because I understand that in this case, if you have a public institution that comes to the risk and to act, you as well need to be able to understand what the project is doing. And when you look at use of proceeds, or infrastructure finance may be a very specific project, but the reality then in the economies, and especially talking about SMEs, may be a bit different. So would you try to tackle that?
ESG data we have today, access to it on a global level, it's not certified, it's not verified. It's self-reported by companies. They can tell you any story they want. The problem with that kind of a setup is that you have the data that is used for investments across the world that is not verified, which means it could be whatever you like it, and there is no analysis capacity on the other side among the asset managers to actually analyze and see, is this really the case, or if it's not the case. I think one relevant thing just to mention in this context, I had a privilege to meet some of the sort of executives for the mid-cap companies in Eastern Europe just recently, last week. Okay. And all of them were looking at me and asking, how come we cannot issue green bonds? How come we have no understanding about the financial infrastructure that is available to other mid-sized companies in Western Europe to help us to transform our businesses? So I think going back to what Christina said, which is very interesting, is the maturity of capital markets in Eastern Europe is so low that this transition that we all want to, we talk about data, we talk about, products, infrastructure, all of these things, strategy, it's also going to take it's a sort of another burden in this, because you can't use this existing system to make existing financial tools to help companies to transform. And this is, I think, if we talk about Central Eastern European countries, this is one of the big problems. They are actually not part of they are not on that train. And as long as they are not on a train, everything we talk about, and I think what Eva was addressing as well, I mean, what ING is doing, what they're doing in Czech Republic on banking associations and, ESG questions, all of that is good. But I can tell you, I've done some of research before I came here. Do you know how many ESG CEE funds there is out there? None. Do you know how many private equity funds on the ESG side in this region there are? There are not many. But I can tell you from an investment point of view, looking at it, there is a huge opportunity to deploy the financial capital we have access to actually help transition, not only transition, but also make financially interesting investments in this region. So I think we need to start also focusing, where can we make a biggest effort in a shortest period of time? Is it data? Is that the part we want to sort of burden small and middle-sized companies with? Or are we going to help them? So what exactly do you need to transform? What exactly is your business? Is that on a product side? Is it on the energy side? How can we shift your business model? How can we do it quick? And how can we deploy financial capital to help you? Instead of deploying this sort of a the carpet, ESG carpet of data, you need to report and then somebody will have a look at it. I mean, you understand what I mean? So I think that's the discussion we need to have. And this is what the banks and financial institutions can actually do in a region. We can go and try to help them and deploy the infrastructure we have.
And I guess there's a discussion, we were talking this earlier at breakfast as well, around proportionality of data. And I always kind of like to take the example of if you're a food producer and you supply potentially 4 or 5 major supermarkets, and maybe you have 2 banks that you bank with, you're potentially in a situation where you're being asked for 7 different sets of information, and there's still not a common framework. So there's different questions being asked per kind of supplier, end user, versus that kind of universal, agreed, proportionate element. And that's certainly something that we're looking at within our SME work stream on the Bankers for Net Zero, is how do we potentially make this much easier for SMEs, whether that's using transactional data from the bank accounts, and how do we use banks and the fact that we interact with our banks so often as potentially a more proactive way of engaging with SMEs and getting that information out that's required, and collaborating with government as well in terms of where the incentives and the grants can be. So I think there's a massive opportunity for the system to play that role.
And to add to this, companies that I met throughout Eastern Europe, some of these companies can actually learn Swedish and Norwegian companies and Danish companies about energy efficiency. They can learn them a lot of things about circular economy. So there are fantastic companies in the region, but we need to sort of make this to scale up, and we need to help them to actually scale up what they're already doing. Not burden them, and I'm very clear about that. I've been doing this for 25, 30 years. Data, there has been discussion from day one. It's not about burdening them with unnecessary data, but actually help them to try to transform. Because we don't have a time. We just don't have it.
Yeah, and Sasha, I absolutely agree. You mentioned a very important thing. We effectively call it at work as a period of helping the more experienced and big ones to the smaller ones and less experienced, because we will not move ahead. And that's why we have effectively deployed the ESG Academy, because big companies are effectively teaching or sharing their experience, their supply chains and the SMEs and mid-caps. But from a bigger scale, as you mentioned, indeed, we need to really share these best practices, and this is really not ongoing enough.
No. And we need it on not only in a very successful Czech Republic, we need it across the region.
Exactly.
It's very important. Yeah.
But you see, there's a parallel here. I think that capital markets infrastructure is not that developed, but also if you compare Central Eastern Europe to the UK, in the UK you have 3 credit bureaus, right? So there is a culture of a lot of very valuable data being shared with customer consent, and I think this matter is very heterogeneous in this region, but there's many countries where you don't have any or very little credit data shared anyway. And then you enter this question on ESG data, where I think pooling that data across the corporates, across the banks, or showing back to the corporates where they are against their peers. I mean, these are amazing initiatives, and we also need policy setters who judge the GDPR rules and some other rules in this context to be forward-looking in that and see the value. I mean, I'm a big believer in that. And your point on prioritization, I think is extremely important, because we can't boil the ocean.
No.
Absolutely not. And I think there's some good ways in, though. So if we think about SMEs, very hard to tackle SMEs if we look through the lens of industries, very difficult. But perhaps we should look through the lens of products and leasing. A lot of SME companies have leasing products. So, you know, whether it's going to be machinery or vehicles and so on. So how can, from the product angle and a bit of a standardization there, can you inject, you know, some growth in green assets and at the same time some growth in collected data?
We need to come in through the business door,
Yeah.
not through the regulation door, because that's not going to, I mean, of course it's important, and I agree it is.
Yeah.
But we need to come through the business door and get them to understand this is going to help my business transform. And as you say, from a product level, because, you know, there's sort of a level playing field they are all on, depending on, you can't get on a sector because they are too small. It's actually probably on the financing, lending, product side, you can come in.
Mm-hmm. Absolutely, because there are probably two aspects to mention when going through the business. Indeed, there is a missing sense of sustainability makes sense from the business point of view that effectively doesn't exist. And obviously, you have this little sense of urgency. We need to deal with sustainability issues now. And if we tackle these two and go via business, then it can work.
Maybe we should also change the language a bit and just try to use how much money can you make by working.
Exactly. That's
instead of talking about, you know, the world is burning and we have a climate change, everybody knows that, but yeah.
Well, but I mean, this has been very interesting because it is actually part of the core debates as well. You know, what is the real sustainability? You know, what is net zero? Is it the business approach? Is it, let's say, the efficiency of the system and trying to keep evolving, or is it all together actually?
And you actually you have to look at the whole system, and exactly. What you are pointing to is that there are really big gaps in the system here in this part of the world, and we know, for example, that. You know, where equity markets are more developed, you know, you have a much faster decarbonization. You need that to make these big leaps in terms of technology and so on. You also know that, you know, where firms that are constrained in terms of access to capital in general are also much worse at decarbonizing. So you need to look at the whole system. What are the gaps and how can we fill them? And that I think is what, you know, institutions like my own need to do, but also I think regulators need to get much more into that framework of thinking, you know, how can we foster the evolution of the systems that we fill these gaps, and rather than becoming just, you know, compliance oriented and having a more strategic view of how you proceed.
Yeah. And I think, you know, I would really like to go down that route in terms of understanding now, you know, from the product side, what can be done from the business, you know, from the business approach to enter to that, talk to the customers. Some questions are coming here as well in terms of like, what are the challenges in the underwriting process? How do you ensure that your client is, how can you ensure transition of your client, etc. So this all is coming together as well, and I really take the point, and I think it plays to what I was saying in the beginning, that Europe is still very much bank finance. There's many elements in the market that are missing that may allow for new products or for new approaches to actually evolve. And I think in part, again, part of the idea that the European regulators were having is to how can we foster sustainable investment? And finally, just to make the point that sustainability, on top of looking at the whole element of sustainable development and understanding, you know, environmental, social governance, is also about sustainability in time. It's about circularity, understanding how business models can actually be resilient from an all-around perspective. So keeping all of this in mind and going into the products, like, how would you see it? And we were talking about also about blended finance, for example. Subsidies, about energy efficiency. So we see that there are specific sectors and there are specific approaches. So I would like to, again, a free-for-all, but
okay,
we would like to
no, so I'm going to go to the most basic, the most primal. So this is from my time at EBRD. And we were looking at, we're dealing with the region that had some of the worst energy efficiency in the world. And how can you make progress? And particularly, how can you make progress with these SMEs and the small? And we tested something called energy efficiency credit lines. We started in Bulgaria. And why did we start in Bulgaria? Because there was a small fund that had been put aside because of the decommissioning of 2 nuclear plants at the time. Ironic, but anyhow, that was how it all got started. And so we worked with several banks in Bulgaria. We gave some incentives for them to train in terms of how to assess energy efficiency. And then we gave a little bit of incentives to entrepreneurs to come forward. And I remember particularly there was a baker in Sofia. They had in the small-scale privatization obtained this bakery. And it was a baker and his wife. The wife was very important. I will tell you later why. But they had never thought in their life about energy efficiency. He was an engineer, she was a customs official before they went into baking. Then came the banking crisis in Bulgaria, mid-90s, and suddenly they were desperate to find a way of surviving. And they went to this bank that we've been working with and got for transforming from, it was basically going to a gas-fired oven and some other things that they did. And from that stage of being completely unaware and completely, and particularly I would say the wife, she took over completely, and they became the proponents. I took them around into different global conferences because they were so convincing in how they had adopted this kind of almost like almost religious approach to energy efficiency. They looked everywhere in their business, they looked in their logistics, they looked everywhere for that. I think that's the spirit that we need to get, and that's where blended finance can help to identify where are those key how should I put it, sort of key points where we can use that very limited, it will always be very limited what's available. How can we use that in the most strategic places? And so we did this with the first round of credit lines, and then we did the second round. We didn't know, now we didn't need to train the bankers because the bankers knew how to do it, and we had to still provide some incentives for entrepreneurs. And then eventually, this became a regular business. We went to Estonia, but Estonia, the banks were already doing this. So we didn't need to have any blended finance. So that's how you can use, be very strategic how you use the blended finance, but that's where you can really make huge improvements.
And it's also like a good example as well of how, let's say, a mainstreaming internally in the institution, even though in this example more for like, the husband and the wife, that if you mainstream it internally and the institution starts thinking about sustainability across business functions, and we see it in banking that is happening, the integration we were talking about is briefly that it can happen at different stages.
Yeah, you need to mainstream your wife, that's what you say.
Well,
I mean, look, yes, but, and with the but, okay. I will bring a proposal.
I'm sorry, I agree with our but.
So I think, and I want to tackle the underwriting sub-question in what you pose, not the whole thing. So, if you look at banks, if you look at business, their focus has been instant credit decisions, pre-scoring, needing to cause as little hassle as possible to the customers when you give out a loan. And this has been a trend for about 10 years. And now we want to ask them information that they don't have. So we have a tension here. And if you think about the inside dynamics of the bank, there's going to be a business function that's rewarded for growth. And then there's going to be a risk function or an ESG function who's knocking on their door and saying, I've got this beautiful specification for how you should be implementing the EU taxonomy. It's only about 120 data items. Let's put it in the underwriting process. So that doesn't work. You can try to boil the ocean, but it doesn't work. Now, in terms of what can be the solution. And I often talk with my Scandinavian colleagues because they are ahead of the curve, and there's some war stories and success stories that can be learned from there. So what one of the big banks is looking at is 3 types of information gathering in the underwriting process. So there's the first, the pure one, where you do get the data certified, attested from a trusted source during the loan origination process, and you refresh it in the monitoring process. This can be done where that structured data exists and should be done for high materiality big portfolios. Then there's a second approach where they are thinking about self-attestation by the client. So you still get the data, you still get the information, but you don't have the level of audit on the data. There's a compromise there. And then there's the third area, which is about the use of proxies, where you might not even have individual level data from the client. You extrapolate from a sample population, you extrapolate from external data, and so on. So I think this is a very sensible approach, and can help to find that compromise between the business and risk and the sustainability departments. But I think there's something that's really crucial here, and that is, if you look at these 3 approaches, how can you use them for the green asset ratio calculation? What's going to be the regulatory angle on that? And that's where we do not yet see any regulatory guidance. Proportionality is mentioned in the taxonomy regulation, it is mentioned in the Pillar 3 rules, but what is acceptable and what is not, and how that links to the size of the bank, the complexity of the customer, I think that would make a huge difference and give banks some confidence on exploring some avenues and knowing that they are not creating work which is going to be thrown away.
No, indeed, and you're tackling now a key issue. That is what we are seeing is the tension between this regulatory framework becoming a tick-the-box exercise, like a reporting exercise, rather than actually a catalyst to facilitate sustainable investments, as I was indicating in the beginning, because it can become exactly that kind of element. And you need to understand the data, you need to understand how to create products that can help you to increase.
But overall,
keep working, no?
I'm positive. I do think it is a catalyst. I do think since the Pillar 3 rules came out, a lot of movement has happened on the market. So, all I'm saying, everything I'm saying it with a positive note. It's just there's more guidance needed.
Yeah, absolutely, I agree. At the same time, we really see that EU taxonomy is speeding up the change here in the region. Obviously, now topped up with the situation which is now. However, indeed, it is going to be transition based, and as of that, we will pick up other topics of sustainability. But indeed, however, I definitely see it as a catalyst with similar eyes as you. That's why we are trying to be innovative, educative, raising awareness, sitting down with the stakeholders to really push boundaries, because there needs to be alignment between public and private sector, because efficient combination of these 2 sources indeed can catalyze the whole process. If it is just and corporates and private sector can do just this without public finance, it cannot do more. So in the CEE region, it's rather about bottom-up approach still than a combination of bottom-up and top-down, and that's the whole problem. Yeah.
And from the bottom-up, what are the key products that you see popping up? For example, is it more about energy efficiency, or is it more about understanding how to underwrite specific project more with a sustainability mindset, or how is the approach?
I think that there were certain phases, and you mentioned it correctly. I worked at EIB, and we saw EBRD energy efficiency lines really deployed very well. On top of that, it was EIB support to SMEs and mid-caps, which was partly also renewable energy and energy efficiency dedicated. So we saw it developing, and indeed, within 10 years' time, it caused a huge positive effect on the entire economy. Banks learned how to do it, how to deploy the capital properly, how to invent also control mechanisms and cooperations with other stakeholders. So I think that was done really well, and many banks have participated in these schemes. And then obviously building up renewable energy sources. Unfortunately in Central Eastern Europe, not that much on too much differentiation. That was 1 or 2 renewable sources only, and even that was not really picked up very well in terms of how the government effectively interfered into these schemes. So from that perspective, there was a phase, and now what we see, obviously you have green finance, you have transition finance. Green finance obviously needs to be now fully taxonomy aligned, which becomes very cumbersome. Before, when it was project finance, it was effectively much more easier done because these projects were happening with the subsidies, with energy efficiency facilities. Now with EU taxonomy, there is a waiting period until it's clear what can qualify, what cannot, and we as banks are trying to really look for any proxies which are available so that we can implement it as soon as possible. But indeed, globally, we have been very active with green loans, particularly with the most sensitive sectors. So from that perspective, that can work. We have long-term history, and taxonomy is effectively only a little add-on compared to what we have done already before, given the fact that there were market practices of ICMA already established on green loans, green bonds. And then you have the transitional finance, which effectively is more and more used because it's a finance for general purposes. At the same time, helps the company to elevate in terms of either ESG rating or certain KPIs. But indeed, measurement of KPIs is also not really frequent in Central Eastern Europe, and particularly being certified or audited. So, however, thanks to these types of funding, the companies get to that already in their sustainability report on an annual basis. You see these figures popping up, which they are using then as the KPIs in these types of fundings. And on top of that, you have this incentive, because in this region, you need to apply a certain level of incentive. It is being either a subsidy or a cheap lending from multinational institutions, or any type of incentive which reduces their margins. And this approach, what a KPI-linked approach actually does, or ESG rating link, is that the better you are, the lower the margin. So I think that works as an incentive for a general profile of the company.
I see. And just briefly, just an intermission as well from my side to say that this has been one of the key elements that at Nepify we have seen, let's say, from the European perspective, that is quite critical to assess. And during last year, we published in February this year the work that we did in the last year on assessing how the EU taxonomy should be applied in terms of mandatory but also non-mandatory application, including a way to understand how to extract data, as well as how to set more transition approaches on financing with taxonomy-based KPIs. So this is something that we work with a group of 25 banks, plus banking associations, in collaboration with the European Banking Federation, and it was quite successful in terms of the market looking at how to use that kind of, let's say, aspects into transition. Because you may have this green finance or transition finance, as you were identifying, but the pure green in the taxonomy, it does not only define that, but also defines like where you stand. And from where you stand to where you should be, that's already a transition. Of course, it's an abrupt transition. It's not like a pathway or a sectoral pathway that was one of the key elements that we're mentioning before. So, and turning to that, I mean, in the UK, how you have seen this, like in terms of, and also looking at the last element that we wanted to cover, there is regulation that I think is already, seeping through. How do you see that connection in the UK? And for example, I see the Green Finance Institute has been also developing new products, definition of green mortgages, etc. So.
Yeah, so there's always been a lot of development of things, but I think the challenge with all of this is there's still a level of fragmentation that we need to deal with. And I always kind of take the analogy, if we're kind of sitting on we're on the banks of a river in the high carbon bank, we need to get to the other side, rather than kind of you've got kind of people starting to wade into the river themselves, and actually we need to kind of step back and get the design engineers around and build the bridge in a much more kind of measured way. And so right now, I'd say we've got loads of people standing at the edge with loads of fantastic ideas, but there's still that level of coordination that needs to kind of bring the whole thing together. And to a certain extent, and we saw it was at Mansion House last week for the Net Zero Delivery Summit, and David Schwimmer is the chief executive of the London Stock Exchange. The London Stock Exchange have taken a very vocal and firm line saying we need stronger regulatory signals in order to get the market moving in a direction that we say that we want it to. So it's been quite interesting actually seeing business and banks and finance actually being quite clear that whilst they don't want a burdensome tick box regulation, they want much clearer market signals to get us over, with the momentum's there, but to really kind of push through that kind of pain barrier right now.
I see.
No, I completely agree. But I'm thinking back to all these discussions about SFDR, Sustainable Financial Disclosure Regulations, taxonomy. Now we have CSRD. We have all these different things. In Central Eastern European region, given what's happening in Ukraine and the war and everything, we know what needs to be done. Energy transition needs to take place now. So if we know that, if we park all of the other things aside and we say, okay, how are we going to enable the companies, small, medium-sized companies, even large companies and banking institutions to meet each other and talk and say, okay, how can we facilitate that transition? I think sometimes, and I have a very sort of a strong feeling about that, is that we are overcomplicating things with lots of frameworks that are different interpretations for me, that is Swedish. And I launched a climate neutral equity fund 2005 in Sweden. That's a long time ago. I did first green bonds, green loans, green mortgages 2012 in Sweden. It's a long time ago. So our predisposition to do this transition is completely different from where we are here. So I think we also need to sort of park aside all the frameworks. We have agreed, they're important. But okay, let's take what is best. And let's try to get Eastern European, Central Eastern European to transform their energy dependency going forward with all the resources we have. Instead of talking about, how we can define taxonomy, how can these companies get to answer the questionnaires on ESG and all of that, we just need to ask them. Okay. We just need to ask them. And I think these are the things we need to discuss. Instead of having all the frameworks, we should actually talk about what practically can be done.
So how would you suggest we start approaching it?
But the part of my question and the statement is that we need to start discussing, okay, if the energy is the focus, let's have a discussion, let's have a Nest conference here. Let's bring the investors that would like to invest in these kind of loans, capital markets, and so on. And let's bring the companies from Central Eastern European region and say, okay, guys, how can we help you in this transition? Do you need green bonds? Okay, how can we help you? How can we help regional banks to issue them, underwrite them? I mean, these are the things we need to, we know it's important. So we need more of a practical things. And I think these banks, and especially this region, they know exactly what it means, because what both Christina and Eva are talking about, if there is a money incentive, they understand that. No. So it's simple. They don't need sustainability. If there is and then if the money incentive is dressed in a sustainability, that's fine. It could be dressed in whatever. But as long as money incentive is clear, we can get them to move.
Okay, I think, if I'm not mistaken, one of the days of the CEE summit was also looking into energy. So,
perfect.
If not mistaken, well, Linda may correct me, but yes, I think that's one of the key elements. I mean, the summit is lasting for 1 week, and I think the key topics are there. And so,
No, because I said before that I had an idea. So I've been out of this region for a couple of years, and came with somewhat fresh eyes. But of course, then you also look at your own experience. But what I thought was going back to the global financial crisis, and as you would remember, this part of the world was extremely exposed. There was no regulatory framework that protected the subsidiaries in this part of the world, and the fundamental problems are actually quite similar. There was this, complete lack of understanding for the perspective of these countries in the headquarters of these banks. There was the complete lack of understanding in the regulators of the banks in the home countries, and there was a lack of coordination across financial institutions, a lack of coordination between local regulators and local subsidiaries. And of course, then came the global financial crisis, and everyone had to try to see what. And I had the pleasure or the fortune to be part of one of these initiatives called the Vienna Initiative at the time. Yes. And the Vienna Initiative was very much about creating this forum. And I think it's very much in the spirit of what you're talking about, to try to make sure that everyone was in the room and you got an understanding for the bridge that you're talking about. How do you get from where we were at the time to something that was reasonable? I mean, just to give you an example, the Austrian regulator suddenly introduced requirements that we just completely, more or less, closed down the subsidiaries in Central and Eastern Europe. And you know, once you sat down and there was a real willingness to listen and understanding that this is a system that has to be treated as a system, and as I said, you look at what are the weaknesses and so on. I think we should have a new Vienna initiative for you know, the net zero transition. So many.
Funnily enough, I mean, I believe that in mid-June the Vienna Initiative's new working group on climate risk is starting.
Yeah.
So it actually, I think they have reached that point, and it's going to be one of the key elements that the EIB is leading into.
Yeah, and you know, and the trigger here is exactly what you were talking about. It's you know, the war in Ukraine. The trigger is, you know, we need to we can't go on as we have been doing. We have to accelerate this, and we need to bring in the development banks as well, because you know, we can provide some additional incentives to speed up this development. We have also now the EU, which we didn't have at the time. The EU had not, and the ECB was not even, I must say, not even looking at this part of the world at the time. And you know, now I think we have that. So there is a real possibility, I think, to make stepwise change.
Okay. So thank you very much. I see that we have like around 4 minutes left. I think we covered like regulation already, we covered products, but I wanted just to turn to every one of you and to start asking for your key takeaways. Like, to understand, after this discussion, what would you like the audience, both here and at home, to keep in their minds? No? Like, what is your pitch? So, Sasha.
You always start with me on the tough.
Yes, I start with you. Yes, yes.
So my pitch would be, I mean, look, I think the sustainable ESG sort of agenda is rapidly changing, not only because of the war in Ukraine, because for the fact that it's not creating any results. Mm-hmm. We've been having trillions and trillions of dollars invested on a banner of ESG, the emissions are going up. Nothing is really changing, to be honest, on the ground. So I think the future will be much more regional. I think it will be much more focused, and it will be smaller in terms of what exactly do we expect companies to do. What I'm doing in Japan is completely new. I started 2005 in Sweden with the carbon neutral equity fund. Now I've launched the next generation ESG fund operating only on a small medium caps in Japan, where I think there is a leverage, very focused, extremely done in a different way. So the message is focus and results. Okay. And I think a new way of sort of speeding this up is actually try to do where it makes the most effect. I think Central Eastern European countries, they could start with energy, and we just focus on that. And if you follow energy trade, you get everywhere.
Helen, please.
Collaboration, I probably think, just taking the whole political situation that we've got going on now, this is it's come to a head so quickly, and it's really, are we going to sit and lean into this now and really kind of push through the pain of that transition that we've been talking about quite a bit, or this is not the time to kind of take your, it's probably not the best analogy, but take your foot off the accelerator, but somewhere in there, and we, in order to do that, it's collaboration through and breaking through silos.
No, thank you.
Fully agree. Join forces, accelerate, put in all the technology, deploy all the money.
Okay, perfect. All the money.
I'm going to say quote in a very not accurate manner, but you know, you can't solve issues with the same mindset that they were created. So I think focus is a very important takeaway. Sharing information, sharing data, sharing practices is a very important takeaway. I really hope that there are some good things with the war in terms of us waking up to needing to make a change. And I do believe that, you know, everyone, retail households, now they feel the pain. So that's an opportunity, a sad one, but also a good opportunity to move.
To change. I see.
Well, so a lot has been said. So I think what I take away is the need to think about the system. And bringing everyone into the room, coordinating, making sure that we identify the gaps. You know, where are the solutions, and how do we get from here to there? I think that's, you know, only if we think systemically are we going to succeed.
Thank you. Thank you very much. I mean, I think we had a very interesting 1 hour and a half. I mean, we're just like 20 seconds left. And to say that we have heard about so many different things today that I think that we do have still way to go. At Nepify, I mean, I cannot make more the pitch to say, like, we have tools, we have open source data, open source information, collaboration, as well as trying to move the money and get results. So it is all working together in the correct way. So I would just like to ask the audience here to please a round of applause to the nice speakers. So thank you very much, everyone.
Thank you.